international perspectives, how do you see the international side of your portfolio?
Most of our bias is in China. So getting back to that point, we've added a lot in recent years. I think we might add a little bit more, but we've got probably 10% of the whole portfolio is exposed to China. So it's a pretty big bet.
How does that break down?
It's a combination of long only. It's all active management. So it's a combination of long only, mainly A shares, active manager in the A shares. And then we've got a couple of hedge funds that are based in China and focused on the China market. And then we've got some exposure in the private portfolio, primarily venture capital. So, and I agree with, a lot of the comments that were made. I think it might've been Todd who was doing the top 7. I think we're the same way. We think technology and innovation is really important. We've been doing a lot of work over the last few years. I mean, we have a lot across our public and our hedge fund portfolios. And, we're doing a lot of work in venture as well. So, that's an area that we just think is important regardless. And, but, like I said, I think what we'll look at is just tweaking a little bit around the margins and I'm in the middle of this work, so I haven't really landed on kind of what my recommendation is going to be to the committee. But I'm thinking more like just a basket of small bets in a number of things that together, maybe it's $10, $20 million out of our portfolio. That's about $950. That's just adding a little bit of exposure. Maybe it's a little bit of Bitcoin, maybe it's a little bit of gold, but gold through a manager that's doing other things, right? So that they're going to be a little more active about when to put it on and take it off with other things. And then, maybe increasing our emerging markets exposure, which is primarily China. Maybe doing a currency hedge, which we haven't done in the past. So it's like I'm sort of leaning towards a basket of things in a modest amount of money. Because like I said, we have a core portfolio that we really like. And from a long-term perspective, we think sort of this tech bias that we have, the growth bias that we have is the right place to be over the long term. And I think it was Eric who said earlier, for the most part, we can take some shorter term volatility. So we're not going to drastically change our overall strategy.
And how about your sisters and brothers and your role in university? Don't they have to keep?
Right, there's a lawnmower outside my door and it broke a window a few minutes ago. So not in my office, but around the corner. I can't hear you. What was that?
I was saying other endowment CIOs like you, but in larger universities that may have not be able to contain COVID impact, are they having to keep their powder dry to be liquid to get through this period, or what are you hearing from them?
It's so case specific in terms of the size of the university, the size of their endowment, what their allocation is. We have a pretty low fixed income allocation. Some folks have a higher fixed income allocation. Do you have a line of credit? Denison does. A lot of institutions have them. If you didn't and you had to go get a line right now, it's very expensive for the folks that went out and tried to get a line of credit in this environment. They might have gotten it, but they paid a lot for it. But I do think overall, there's in higher ed, there's just a level of uncertainty. I mean, we're happy right now. Could we have an outbreak tomorrow and have to send kids home? Yeah, that could happen. We don't think it will, but it could. Could something worse happen in Ohio and the governor changes the rules and we have to comply with that? I mean, those are the kinds of things people don't know. And I think, like I said, winter is a big issue for a lot of schools. The more the students are in their rooms hanging out, the greater the potential is for a problem. And I think a lot of schools are, they've been dealing with, like, we've been in crisis and we've been very worried about like getting the fall set up so that we can invite students back. But the traditional recruiting that happens and students being able to come to campuses and visit, like the seniors in high school, juniors and seniors who will come to campuses and visit, they're not doing that right now. for the most part, they're really not doing that. And many students haven't taken the SAT or the ACT exams. And those are like early indicators to universities of who's interested in their schools so that they can do more targeted outreach. None of that's happening. And so I think, people will get through this year, but then next year is kind of a big question in higher ed. Will you have the same kind of enrollment? Will you have the same kind of applications? Are people going to get through this period and say it's not worth the money? The rise of all of this online educational opportunities, will there be a subset of students who just say, I'm not going to do 4-year, or families who say, we're not going to pay for that, you're going to do something online instead? So I think there's just a lot of uncertainty